bonus video, we're going to be diving into four unique strategies that I have for with Elliott Wave that I personally use and that I've created for myself. Now, the biggest thing about Elliott Wave, you guys, is that it's adaptable. Like you can read the markets and you can react accordingly. So strategies are great, but Elliott Wave is so much more powerful than strategies because strategies you follow a set guideline of rules. You're looking for certain indicators to basically pull back to or this or that in order to get into an entry in a position. Um, and that's what we do originally to set ourselves up with Elliott Wave. And that's where these strategies come into play that I'm going to show you. These are what I scan for, this is what I look for, and then I jump in. But depending on what the market does thereafter, Elliott Wave allows me to react to it. And I can't tell you how many times I've been able to get out of a position in profit or get out of it to break even far before letting it ever trigger a stop loss. If you're following your counts, you should get confirmation as to whether or not your trade is going south long before your stop loss gets triggered. So keep that in mind as we go through these. These are definitely good. I'm going to give you two entry strategies and two exit strategies that I use. One with impulse waves, the other is going to be with corrections, and I do trade corrections. It is counter trend trading. I do scalp trading in it, and especially in complex corrections or in very long lapsed corrections, on like a macro view, like a week, then there's plenty of opportunity to be traded in that. You just have to understand the wave structures of it. And it really is just as simple as that. Once you understand the wave structures and how they flow and ebb together with everything, then it really doesn't matter whether it's correction, counter trend, or trend. You understand which way it is. And so you adapt a strategy and take profits accordingly to it. So my counter trend strategies obviously are going to be scalp trades because they're riskier. So I want to be in and out of the market as quick as I possibly can, but capitalize on some profits in the meantime. So it allows me to trade on both sides of the market there. So I want to go ahead and dive into this here, and I'm going to go ahead and I'm going to start off with the impulse first. And the biggest thing about the impulse here is that we have five waves and that we know what the trend is. Okay, when we're talking about trend reversals, those are going to be a bit trickier at first to try and get your grasp around. And there's going to be a little bit more risk involved. You're basically, when we have a trend reversal, you're taking a high risk, gamble that it is the turning point of the market. And that you can increase that probability with extensions and the proper measurements and retracements and so forth on the macro view. But overall, you're going to use this on every single time frame. Okay. And I'm going to show you some real life examples of this, but we're going to do some textbook ones first, and then we'll zoom into the charts to show how this is actually applied. So the first is obviously just the retracement of that second wave and getting in on the zero point 0.5 to 0.618 retracement. So when there's five waves completed here, and you're going to use everything that I've taught you. You're going to use your RSI to pick the third wave of that first wave so that you can see the divergence between the third and the fifth of the top so that you know when it's pulling back. You can short that. It's one of my favorite strategies. I'm going to talk to you guys about that in here as well. But so that's going to be one way we pull back on it. And then here is our setup to where we look for a fib retracement from low to high. We've already counted the five waves in this. We have a good idea of where it's at. So we have the fib retracement that we pull. We're looking for the 0.5, 0.618. I do a laddered entry strategy where I do partial at the 0.5 and then I double up on the 618. Okay, that way it brings my average entry down in between the two. And then I've got stop loss underneath previous low, right underneath previous low, because it's a five wave structure. It's invalidated if we break underneath it. Okay, so I don't need to follow the 0.236382. So once I get that five waves, we get the pullback, I get my entry in here. I do not wait for the confirmation of the bounce on this one here, especially if I know I've got the five waves and I've counted my impulse wave in it. If this is a trend reversal, it'll be a little bit different, you guys, but we have a trend, okay? We have a trend established. This is where we're going. And so for each five waves that's being created, we're playing off of the one. Jumping in on the 0.5 to 0.618 and looking for that move to the upside for the third wave. Two things I do here is that just in case I'm wrong and this is a zigzag, because there's not a whole lot of difference between a 1, 2, 3 and a zigzag like we've talked about, I'm going to take profits off the table at the top of this channel here. I pull this channel by pulling my 0 and my 2, and then I just pull out and then I pull up, and it creates this channel right here from the top of my 1. Okay. This is very typical to see in ABC right here, as such, like that. Okay. So I take profits off the top of the 1-to-1 extension. You can see my extension here, 1-to-1. All right. The rest I leave on the table, looking for a break to the upside, counting my sub waves in the meantime to get more confidence in that count. And once we break to the upside here, I'm looking to capitalize on that 1.618, knowing that this is an impulse wave. If we stall out at the 1.236 to 1.382, I will close my position. So it just depends on the internal wave count of it. But for the most part, the entry strategy on this is pulling back a laddered entry strategy from the zero point 0.5 to the 0.618 after a 5 wave sequence from a low. Okay. So the one thing that you want to be careful of with this, so that you're also armed with the inventory, and the knowledge that, hey, how could this go south? Is that a lot of people will mistake this 5 wave run up for some sort of a C wave. Okay. And so you'll have some sort of a 3-3-5 structure, maybe an expanded flat, and you're not aware of what your count is back here. If you're tracking your count back here, this should not be an issue, or you should at least be aware of it. Okay. The way that this will go south on you is that the trend is still moving downwards. Okay. Which means that you did not have a good idea of where your trend was at, expecting such a big impulse wave right here. Okay. So if this is an ABC, it means that your price is coming down this way. You're correcting it and you're continuing that trend down to the downside. Okay. How the biggest key to knowing this right here is going to be this 3 wave move right here and this 3 wave pullback right here coming into your expanded flat pocket right there. Okay, that's basically your biggest giveaways are your wave counts right prior to this. We talk about that in when we're talking in the bonus video from Count Insights. So a few things you'll be able to perfect, okay, with this strategy as it kind of comes in, but it's really a simple strategy that just says 0.5, 0.618 on the retrace. Now, I always say it's mandatory for me to find 3 areas of confluence in order to take a position. So I'm never taking a position just based off of the zero point 0.5 to 0.618. I'm also taking position based off of the ABC correction pullback right here for wave two. So wave two should get a pullback like this, which means that when I get that first pivot in there, I should be able to pull a fib retracement of this, project where that B wave is going to go. I should be able to take the trend based extension and move it from the A to the B here coming down. I should be able to aim for the 1-to-1 and the 1.236. It should line up with my zero point 0.5 and my 0.618, giving me more confluence. Okay, I'm looking at EMAs as well. I'm looking at horizontal support resistances of this wave structure right here as well. So of where we're pivoting from. All right. So usually coming back to the top of the wave one territory and wave A pivoting at the wave four are pretty typical things that I'm looking for in order to take this entry overall right here. Okay. I'm managing my risk to reward. So I'm using my tool that I taught you guys about here too. So I'm looking at taking a long right here, which means that my stop loss is going underneath previous low because 5 wave structure is an invalidation. I'm looking for a 1.618 extension up, which gives me a 3.24 risk to reward ratio, which means that I'm looking at an 8.3% stop loss. If that's the stop loss that I'm looking at, then I need to account and take the proper position size in order to manage my risk as well. When this bounces and I get on a smaller degree this first leg up, it usually comes back to the median of the channel, pulls back there. Your third wave usually peaks up and breaks the channel, giving you confirmation. You get a quick little pullback there and you finish off with your fifth wave. You should have a double tap on the top of this trend line or this channel here. So tap one and then this one here, tap two in order to get confirmation for your fifth wave. Okay, so just some strategies here that we can kind of incorporate into the charts. Let's take a look at what it looks like when we apply it up here. Okay, so um, we've got a we've got a low here. Okay, we've got a 5 wave move up. So what I'm looking for here is I'm looking for, and we'll do a couple of different examples here. I haven't tested any of these yet. So pull back here, we had a 618. So laddered at 0.5, 0.618. This would have been our entry zone for it. We also would have wanted to match it up with the trend extension of this first leg down. This was your ABC. You can see that pretty clearly. ABC coming in. Look at the 1-to-1 matching up with the 618. So I probably wouldn't have even worried about the zero point 0.5. I would have just stacked at the 618 because the 1-to-1 is going to be my first targeted area, whereas the zero point 0.5 kind of lands in the middle of no man's land. So I would have probably targeted the 618 and just laddered a couple of entries there. Stop loss underneath previous low here. I would have used my tool for the long position, said, here's my entry. We're going to stack stop loss here, and we're going to look for the upside to the 1.618. We're going to take this trend extension move from here to here. Okay. And we're going to look for a 1.618, puts us all the way up here, right at this bad boy. I'm going to look at the difference between log and linear. Boom, boom. Okay. And sure enough, that matches up pretty decent for a target up here. So I'm going to be looking for that target there. We've got a, what is that? A 3.86 risk reward ratio, 8% stop loss. I'm going to calculate my position size accordingly for this upswing here. Now, the only thing that we're missing overall on this is where's the trend at? Okay. We need to zoom out and look at the bigger picture here because the trend in all reality is downwards. So would this had worked out? Yes, but only because we caught a trend reversal. More than likely, that's not going to be the case of what we can actually roll with. So let's go look at another move over here, smaller degree. Okay, so we've got a 5-wave structure here, but let's just say we kick off of this low here. We've had a pretty significant drop. So a few things that I'm doing is that one, I'm looking for us to retrace back some of this drop here. So I'm looking at a fib retracement from high to low. Okay. I'm assuming that at very minimum, if we're in a fourth wave, let's just assume the trend is down, we're in a fourth wave. I'm looking for a 236 to a 382. Okay, 236. So 236 gets hit here, but we did it with 5 waves. If we start with 5 waves, we end with 5 waves. We've talked about that. So that means that we should at least see follow through for an ABC. Very, very likely that the pullback here is going to be through a 0.5.618. So that's going to be the way that I want to play this is going to be a 0.5.618. Here's our 0.5. Here's our 0.618. Okay. Kind of pull that up just a tad bit more. So we ladder buys here and here, double up on the 618, stop loss underneath the previous low right here. Okay. We're looking for a trend extension on this pullback here when we get this completion here. So this is our first pivot. So reality is we would probably have pulled from there first. Assuming we're only playing off of what we can see at the time. So here's our 1-to-1. It lands at the 0.382. So that offers an opportunity, like says him, okay, 0.382. That's not too bad. So I probably would have accepted that, and then the point 236 to 382 would have been the 0.5. So I would have stacked instead of the 618 and the 0.5. I would have done the 382 and the 0.5 here. When we bounced from here, though, you can see that we rolled over on a 3-wave manner. Right there. As price came over right here, we came back into this territory, invalidating that this was going to be an impulse and that this was our true kickoff zone right there, which means I would have exited my position right there. Okay. Exit my position right there would have made me small profits, if not maybe paid for fees or broke even, but I would have been able to exit it far beyond letting it go down to my stop loss by any means. Okay. So knowing that I've got a 3-wave move there, I would reevaluate this structure here, assuming that this is one leg here. We've got another here now, and we're looking for a 1-to-1 extension coming back down. So I'd be pulling a different extension from here back up and over. And I've got a 1-to-1 now right here at the 618. Boom, back in game again. Okay, so now I'm going to go ahead and stack some right here, front run the 618 just a little bit. And I probably would have had part of my position picked up, but not all of it. But it would have paid off in the long run because we had full rally from there. Okay, so you can see how we react to the markets accordingly, depending on the wave structure that we're seeing as well. But also, the way that I lay this out is based off of what we can see at the time. Notice that I didn't just automatically go from this pivot here, here, and here and say, okay, we're perfect. We hit the 618. Congratulations. No, it's based off of what we can see during live time. Okay. And it's being able to react to the markets accordingly and be confident in your count and understanding the market flow. That's just going to come with time and practice and application. You've got to get in and get your hands dirty. Okay. So that's an example of how I look at pulling back on a 5-wave structure. Now, say this move here had bounced up with just 3 waves like that, I would not be interested in trying to jump in at a 0.5. Okay. That is not how this strategy works. We've got to have a clean 5-wave structure up in order to look for that 3-wave pullback. We pull an extension after the first pivot, and then we can follow through. Okay. So keep that in mind. That's those are the things that all come into play when it comes to that first strategy there. Okay. The next one is going to be a counter trend strategy. So this is where I look at expanded B waves. So remember our correction overlaying. Well, here's the strategy that goes along with that. Okay. So you correction overlaying highlights a big box, and that big box is a box we want to stay out of. We want to stay away from it. Okay, that was the wrong tool. Let's try that one more time. All right, so this box right here, we want to stay out of this, which means, what does that mean? It means that we don't want to be taking entries at a zero point 0.5 or a 0.618 or even a 0.786. We want to be taking entries at 100 to 138.2. Okay, so we use a fib retracement tool from 0 to A, and we're looking at that 1.236, 1.382 pocket, boom, and we're looking at 100%. So this is where we trade like the institutions with the swing fail strategies, where we come in, okay, and we go 1, 2, 3, we stack buys there, and we put our stop loss right on the outside of our 618. The moment that we pivot, we move the stop loss up to underneath previous low to snug it up nice and tight. But the reason for this is that we're stacking buys down here on the extreme side of the correction, which means, are you always going to get the entry? No. And that's okay because we don't want to be stuck in correction land in the middle of all the chop. We want the extreme sides of it if we're going to trade counter trend. So in this case here, I'm looking for the B wave that's expanded. I have a really tight risk to reward ratio because I'm waiting for the extreme side of it, tucking that stop loss underneath at that 618. And then my exit for this is only going to be right up in the top right corner of this box. And the reason being is that we only have two C waves. Okay. We only have two C waves that go outside of this box here. Okay. You have your expanded flat. Okay. Which the C wave comes out here. And then you have a zigzag. And that C wave comes out here. If your order down here for this B wave got picked up, then you have a 1 out of 3 chance that this move right here is actually going to play out all the way to the upside. Your 2 out of 3 chances are going to be your running flat, which run into a 0.618, and then a 1-to-1 extension as well. Okay. And then you have your 1.236. Your expanded flat on the other side, though, only comes out to the 1.618. Okay. So instead of going for the extreme side of the exit, if you're trading counter trend, you go for the conservative side of it. So you go for the extreme entry and you exit on the conservative end of it. Okay. Because this is a counter trend trade. So we're managing our risk this way. So we move up, we exit at the 0.618, the 1-to-1, 1.236. Laddered exits out. The 618, I never take out my full position. I just take out enough to pay for the fees just so that I'm in the positive, even if it downturns from there. Remember, the trend is going back down. So we will eventually turn back down this way, which then opens up an entry strategy. So my entry strategy now for this bad boy is going to be aiming in on the top side of the box. Okay, so now I'm looking for this move, just like I was for the expanded B. Now I'm looking for 1.236 to 1.618 entry strategy. Okay, and this is going to short back into the trend since the trend is down. I'm going to short back into the market right here. All right, my stop loss is going to be a combination of this high here, the 618, plus the 1.618 of this move right here. So that leaves me with, I'm going to change the color here. Okay, that leaves me with either stop loss right there or right here. So at first, I'll probably stick my stop loss right there. I'm going to go with laddered entries right here to short back down into the trend. Okay, stop loss above here. The moment that we pivot, I'll bring the stop loss back down above that 0.382 instead and snug it up nice and tight, and then look for a move back down into the downside. Okay, let's go apply this to the actual charts. Okay, so here's one potential one that we could do here. So we get a bounce, we roll over. Okay, so what we're looking at here is that we know that any sort of a retracement back up is counter trend to this move here. Okay, so we're going to look at taking a counter trend trade. So let's just say we snag from here to here. Okay, we're looking at 105 to 138.2, stop loss under the 618. When it pivots, We snug our stop loss up underneath the previous low, and we look for that 5-wave structure to complete out. We are staying out of, this is our box, okay? This is our entry box, and this is our exit box, okay? And we are looking for a re-entry back into the market up here. Okay, so this is how this would play out. This bounces up here, boom, we hit the top of our box, we go boom. Let me grab the brush. We exit, exit, exit. Okay, we're out of that position altogether. We did our scalp trade. That's it. We're expecting to go back down into the market. We would be counting our 5-wave structure. We'd be looking for divergence, right? We'd be looking for the tops of our RSIs. All right, so this move comes back down. Probably would have missed that opportunity as it didn't come back out into our overall box here. So this move here, it now bounces back up, right? We hit that 0.618, 0.5 right there. This is where it would start to concern me, and I would be, do we have a little bit of a bigger trend coming up? Maybe a bigger ABC. Okay, still though, let's hold with our strategy here instead of getting into the wave structure just yet. But price comes up here. So what I'm looking for right now is I want the 1.618 extension of this move right here, here, and back down. Okay, that's going to put me, if you can see the red line right here, that says right here is where we should be entering in at. Okay, so this is where we're entering in at, and for a move back down into the trend that way. And it should be an impulse move to continue a trend, not corrective, right? So that's why this would have given it away a little bit that we're going to see another move back up to the upside, but I don't want to get into that. So impulse back down to continue the trend. Okay, so 618 here. We've also got the 382 and the 236, which means stop loss here above our 618. We're looking for an entry here, here, and here. Okay, so we catch right in this top. Now we chop to the right. That's bad news. It means get out. Okay, because that means that we're corrective. We didn't impulse back down like we were supposed to. Okay, so we would have been able to exit this position before our stop loss up here being triggered. All right. But that is how this strategy would work. Notice that we did come back up to this range up here, but we just came back down. So we ended up getting a 5-wave move here, and it was just a different wave structure. So you would adapt to that once that kind of played out, knowing what you were dealing with. Okay. Um, let's look at another one, counter trend like that. Let's take a look at this one here. Okay, so counter trend again, you're getting in, you're getting out. Okay, so we've got a 3-wave structure here. Okay, that's our low. Here's our high. So we're going to be pulling our fib retracement from. Okay, and we are looking for the box is where we want to stay out of. Okay, we want to enter in down here at 105 to 1.382. We want to exit here, and we want to enter back into the trend up here. Okay, so this is how we basically set up our strategy for it. And then we're following the wave structure in between as we roll with this. Okay, so we look at stack your orders, stop loss under the 618. Okay, manage your position size according to your stop loss. We've got our 3-wave move coming back down here. We're looking for an extension back up now, trend extension from low to high and back down to the B. Okay, and you can see here we've got I'm going to highlight it with the purple. We've got a 1-to-1, 1-2-3, 1-3-8-2, and we've got the 0.6 right here. Okay, so take fees off the table, 618, ladder out of your position at 1-to-1, 1-2-3, and the 1-3-8-2. Okay, out of your position 100% by the time we come up into the double top range here. Yes, we blew past it. It's besides the point. It's all about strategy and managing your risk. Okay, it's not about getting the tops and bottoms 100% exact for the exit. Remember, this is counter trend. This could very easily just be a flat rather than an expanded flat. Okay, so 1.618. Now we're looking at entering back into the market. Obviously, with this type of a price action, you're not going to step in front of that with just these green candles. There's absolutely no count to it for your reassurance. You're going to use that count to your advantage. And so let it play out. And obviously, it comes back a lot more impulsive. This would come off more like it's a trend reversal, and you probably wouldn't even touch this up here at all. Okay. But again, just to show where the plays come in, we've also got this right here, the 618. So that's where your stop loss would have been, and you would have looked at a short in right about 618 is right there. Okay, so you're looking for the shorts on the extreme, stop loss on the 618 on the outside from your previous lows and highs of this swing here. This trade here to the upside would have played out perfect. This one here would have resulted in a small loss, but again, if knowing Elliott Wave like you guys are going to know Elliott Wave, this structure here would have said 100% don't even try stepping in front of that. Let it play out and finish out wherever it's going to be ending at, and we can reevaluate and look at another trade there. Okay. So those are my strategies, you guys, for looking at entries and exits. Okay. You've got a counter trend trade, you've got a zero point 0.5. And then I'm going to leave you with one more bonus one too. And that's going to be my favorite is the RSI divergence between the third and the fifth wave. We've talked about this multiple times. We've given the time frame fractals. We've talked about it with in the module 3 for impulse waves. Now it's this is where we really are going to put it into play here, where we look for the divergence between a third and a fifth. And I do it for both time frames, 15-minute and for a 4-hour. And that time frame fractal becomes so powerful, you guys, if you watch how it unravels, because you can really pick the trades in between each ones. So you can trade the 15-minute as it leads into your 4-hour, knowing that it's leading into your 4-hour, only to pull back again in the 4-hour and allow you to counter trend trade that as well. Okay, so for me, that divergence between your third wave and your fifth wave right there is what I'm looking for. And I know that my 15-minute plays out to about a 3% drop, and my 4-hour plays out to usually about a 7 to 12% drop. So I've built a relationship with them that I'm familiar with, and that you guys will build that same relationship with them as well. So um, that's my favorite strategy for calling the tops is going to be that RSI divergence, but you've got to use the time frame fractal knowledge that I've taught you as well in order to really get good at it. Okay. Um, Coming back here to this run up, this is going to be a good one to kind of go through some examples of it, obviously, because everything was corrective in here. So we need to drop down to a smaller time frame. Um, but we've got divergence here and here and then here. This is your expanded B. Okay. And we've got this move here and here resulted in about a 4% swing right there. And then again, that divergence coming out from the expanded resulted in a 7%. Okay. This move up here, we've got a divergence between here and here, which resulted in this drop. You probably wouldn't have caught the wick. That's was crazy, right? Being realistic here. And then you had an expanded flat here up there as well, where we had another B wave and then coming down there. So we've also would have capitalized on this swing as well, which ended up in a price range here of about 16%. So this is when we were working off of daily time frames. So you'd be able to watch the fractals of the time frames within these structures as well as this kind of panned out. Okay. Um, Going up to a higher time frame here, like a 4-hour. And I'll kind of leave the ending note with this here, with a quick recap of the strategies that we went over. Okay, so that we have some clarity and keeping it kind of simplistic. I know I talked fast in this module, but it was just a lot of information to go over. So make sure to go back, watch it. We definitely walked through them very well. So maybe even just slow down my voice a little bit. Put it on a half a speed or something and walk through it with me again. Um, so let's see here. Got another one here as well. And you know what? Sometimes if you're lost on your time frames, you're not going to be able to notice the divergence, and that's all right. It just means that you didn't get the trade, you missed it. There's going to be plenty more trades. We never want to FOMO into anything. There's always so many different assets out there to trade. So the strategies that we went over, you guys, are going to be the pullback on the wave one of a 5-wave structure for the zero point 0.5 to 0.618 retrace. But we're also matching that up always with at least 3 things of confluence in order to confirm an entry. We're looking at a target, which is our exit strategy, of a 1-to-1 for taking profits, just in case it's an ABC zigzag, and then the 1.618 for the impulse wave. We can take some off at the 1.236 as well. All right. Then we've got the counter trend corrections. which is your entry strategies for your B wave that's expanded, should fall in at the 105 to 138.2% target, okay, outside of that middle box. And then you're looking for an exit strategy of a 0.618 to take care of fees, 1 to a 1.236, and the top right corner of the inside of the box. And then an entry strategy back into the trend on the outside of the box that falls at a 1.618 to a 1.236. Stop loss is being used outside of the retracement tool for the Fibonacci at the 0.618, and then is snugged up tight to the 382 whenever we pivot, or the 2386. Wherever we pivot at, you can snug it up tight to that previous low there. Okay. And then lastly, we've got the RSI divergence between the third and the fifth wave in order to help pick our tops using the information from the bonus video on time frame fractal secrets for you to capitalize on actually seeing the subwave counts of your larger degrees in order to build a relationship with the Elliott waves of each time frame in order to pick the tops and bottoms beautifully. Okay. So that's it for this video, you guys. I hope that you found it valuable. There's a ton of information in it. Make sure to go back, rewatch it again, and I will yeah, I will see you guys inside the Discord. Come join the Discord, you guys. If you're not in there, you got to surround yourself around that community. It's a must. It's an absolute must. You can't do this by yourself, you guys. So come join that community, and we'll be doing the updates in there together. I'll help you with your chart feedback, exclusive videos, a lot more personalized attention. It's a win-win, all right? I'll see you guys inside. Much love.